Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing jumble of corporate filings to find the juicy bits. Today we're diving into Quantumzyme Corp's latest report. It seems like they're trying to clean up the chemical industry with enzymes, but let's see if their own books are as clean. Before we get into the nitty-gritty, if you love digging into these reports with us, make sure you are subscribed and also check out our Discord community link down in the description. Alright, so this filing is an amendment to Quantumzyme Corp's annual report. Think of it as them going back to fix a few things after their initial filing. They're mainly adding an updated audit report and a bit more detail on executive compensation. Now, for a company that is all about clean chemistry, you'd hope their own paperwork would be spotless from the start. But here we are. Let's jump right into the numbers. We're looking at their balance sheet and wow, things are tight. As of the 31st of July 2025, Quantumzyme had just $584 in cash. That's less than $1,000 to run a whole company. Their total assets are only $584. Now for the liabilities, they owe over $441,000. This means they have a working capital deficit of over $440,000. That is a massive gap between what they owe and what they have. Looking at their income statement for the year ending the 31st of July 2025, they had a net loss of nearly $200,000. This is on zero revenue, by the way. For the previous year, their net loss was slightly less, around $178,000. Also, with no revenue, it seems like their main activity is incurring costs. They are burning cash rapidly, which is evident from their cash flow statement. For the year ending the 31st of July 2025, they used $125,181 in operating activities. Their financing activities did bring in some cash, around $125,765, mostly from issuing common stock and taking on notes payable. But that just barely plugged the hole. The big takeaway here is their cash position, ending at just $584. This puts the company in a precarious financial spot, raising serious doubts about their ability to continue operating. Digging into their debt, they have quite a few promissory notes. As of the 31st of July 2025, their total notes payable were over $249,000. Some of these notes carry a 10% interest rate and are due on demand. This means lenders could ask for their money back at any time, adding a layer of immediate risk. They also have over $17,000 in amounts due to related parties, which are non-interest bearing but still a liability. Now let's talk risk. Quantumzyme is very upfront about the dangers. They explicitly state the company should be viewed as a high-risk investment and speculative. They admit any investment could result in a complete loss. A big one is their dependence on their sole employee, Mr. Kulkarni. If Hess gone, they might not be able to execute their strategy. This is a classic red flag for a company that's so reliant on one person. They also mention that their shares are considered penny stock, which can make them harder to trade and less attractive to investors. On the business side, Quantumzyme is focused on developing engineered enzymes for what they call clean and green chemistry. They aim to replace old polluting chemical processes with more environmentally friendly enzyme. Based ones, their initial target is making ibuprofen, a common drug, more sustainably. They believe their approach reduces costs, impurities, and hazardous waste, which sounds great, especially with the growing emphasis on ESG or environmental, social, and governance factors. However, breaking into this market is tough. They acknowledge that major players like Novozymes and DuPont have far greater resources. These giants can afford extensive research and development and attract top talent, putting Quantumzyme at a significant disadvantage. They hope to differentiate themselves through dedication and scientific principles. But competing with well-funded giants is always a steep uphill battle. Looking at their financial health, the situation is quite dire. For the year ended the 31st of July 2025, they incurred operating expenses of over $180,000, with virtually no revenue. Their total operating expenses are increasing, which they attribute to higher professional fees. This suggests they are spending a lot on consultants and legal help, often a sign of a company trying to navigate complex challenges or stay compliant. To raise also a concerning note about their internal controls. Management admits there are material weaknesses because of a lack of segregation of duties and limited resources due to the company's size. This means their financial reporting might not be as reliable as it should be. They plan to hire more people to fix this, but their current financial situation makes that a challenge. This lack of robust internal controls is another significant risk factor. Even their auditor, Frushi and Associates II, PLC, points out the substantial doubt about the company's ability to continue as a going concern. They've prepared the financial statements, assuming the company will keep running, but they clearly state the significant losses, accumulated deficit, and negative cash flow cast a shadow over Quantumzyme's future. Their plans to secure funding from selling securities or finding private investment are crucial, but with no firm agreements, there is no guarantee of this funding materializing. So, what is the verdict on Quantumzyme Corp? They have an ambitious vision to make chemical manufacturing greener, which is commendable. However, the reality on the ground is a company with practically no cash, significant debt, and a clear reliance on a single individual. The admission of material weaknesses in their financial controls and the auditor's substantial doubt about their ability to continue as a going concern paint a very challenging picture. While their technology could be valuable, their current financial state and operational structure make this a very high-risk, speculative investment, as they themselves admit. They are betting everything on securing future funding and getting their enzyme technology to market successfully, which is a long shot given the competition and their current financial fragility. Their strategy of licensing their tech might be their only path forward, but the road ahead looks incredibly bumpy. Alright? That is our breakdown of Quantumzyme Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, remember to hit that like button and subscribe for more corporate deep dives. And don't forget to check out the Discord community linked in the description below for more discussions and insights. Thanks for watching. See you next time.